Good morning, good afternoon, or good evening, wherever you might be in this fine world. You are listening to the Startup Selling Show, talking sales with Scott Sambucci. That's me. Today's episode is a daily dose edition, and it is a continuation of our series of podcasts talking about the 10 sales rules for startup founders, or sometimes what I call the 10 first principles when it comes to startup selling. So over the course of the last couple of weeks and months, been documenting these 10 sales rules, and we are on number 10 today. So I'm going to issue the recap of the first ones that we've covered. You can find those here in the podcast feed. You can find it on my blog at salesquality.com/blog. You can find all of those episodes because I want to get right to it. This is probably one of my favorites. Well, they're all my favorite in some respects, but when it comes to thinking about startup selling and what it means for a founder to really adopt and internalize these first principles, number 10 is one of those ones that I think is important to describe, but it's also important to make sure we are interpreting correctly. So let me explain. So the 10th sales rule for startup founders is the concept of relentless forward progress. Relentless forward progress. So those of you that have been listeners or reading my stuff over the course of many years, you might recognize this phrase, relentless forward progress. In fact, if you're watching this video, I've actually got a sign there in my office that says relentless forward progress that my wife gave to me. And this is a concept that a friend of mine, Kelly, who is an ultra runner, he and I are both in the ultra circuit, and we've done tons and tons of miles together, lots of races, lots of time on the trail together. And when you're running these long ultra marathons, oftentimes there's plenty of points along the way throughout the course of a 50-mile or 100-mile or 200-mile run where you're just like, man, I do not want to go any further. There's things that go wrong. You get injured, you get blisters, you're having stomach issues, you haven't slept in a while, you're tired, you're cranky, you kicked a rock and fell in the dirt. And, there's all kinds of reasons why you might want to quit. And this concept of relentless forward progress is something that he and I talk about. I don't know if we're ever probably not the first people to come up with it, but it's something that we adopted as a mantra whenever we're doing these races, because I've paced him in his races. He has paced me in my races. We've worked aid stations together. We've run, as I said, many, many miles along the trail over the years. And concept of relentless forward progress is really simple, which is like, once you're in this race, the only way to get to the finish line is to follow this mantra, relentless forward progress. It doesn't matter how slow you're moving, as long as you're moving forward, you will get to the finish line, save some kind of extreme circumstance. And I think about this as a sales rule for startup founders because, and I also say this in that it's easy to misinterpret what this means, because obviously as a startup, I talk about how it's much like running an ultra marathon. You've got this huge daunting task in front of you with ups and downs, lots of obstacles in the way, lots of reasons for you to want to quit or have to quit. Yet we choose this path and we choose to continue forward with relentless forward progress. And so there are times, though, when it feels real that pull to quit is really strong. And sometimes we actually should quit in some respects. And I'm going to explain this in more detail in a moment, because going in a single direction towards a single outcome may not, in fact, be the way to get to the ultimate place that we want to go. And so sometimes quitting isn't necessarily stopping, but it's changing direction or trying something new. And so as you're going through your sales building, as you're going through your company building, we have to have this mindset of relentless forward progress. I want to give you a couple of examples of what I mean by this and how we can properly, in my opinion, interpret what I mean by this. So first, and I have 4 examples here on my notepad here. So the first example is the sort of, we'll call it like the daily business mistakes. Not that they happen daily, but we just think about running a startup or running a business. We're many of us, if you're a first-time founder, and even if you're a multi-time founder, every new company is its own different experience. It's different challenges, different opportunities, different market, different product, different buyers, different everything, right? There's never 2 that are exactly the same. And certainly when you're running a startup, you're trying to build something and sell something that nobody's ever bought before. I mean, if you think about conceptually, you've built this product to solve a problem in a way that nobody else has solved it. And so when you go to show it to your customers and you try to sell it, you don't necessarily have a model on which to sell that product, right? If you have an AI engine or some kind of automation and workflow or whatever the magic is that makes your product go, a lot of times we're replacing manual process or spreadsheets or SharePoint or even some old outdated system that just isn't good enough anymore. And so your customers oftentimes don't have a model for what it means to buy a product like yours. So that in itself makes it insanely difficult to grow sales at your startup. And so when you think about these sort of like daily activities that you're doing with your business, whether it's daily, weekly, monthly, there are many mistakes that happen. There are the bad hires. I've talked about, hiring in the last couple of episodes where, with the best intentions, we might hire somebody and it turns out to be the wrong fit or the wrong timing or the wrong person or the wrong seat, whatever the reason. And we have to let that person go. And that's hard and it's discouraging. Or sometimes we have to let team go. And I know many of you have had to let team go recently because of pullbacks on investment capital, the requirement to extend runway and reduce burn rate. And those are hard. It's not necessarily a mistake, but it's a hard situation that you have to handle. It's an obstacle, it's an obstruction. And it could make you want to quit. You say, like, I just don't want to have to do this anymore. There could be bad investments that we make in our business. We could choose to go a certain direction with the product roadmap, and it turns out to be the wrong direction. Or we choose to add an integration that one big customer or potential customer said that once you have that, insert integration, Salesforce integration, for example, then we will buy from you. And so we go heads down and we have our product team and our engineering team build out that integration, even though it takes 2 months and it's deviating from our normal product roadmap. And then we come out of that product development with the new integration, and we go show it to the potential customer, and they say, "Oh, here's X reason why we can't buy right now." Right? It's discouraging. It's hard. It's in some ways could have been a bad investment, and these are reasons to feel badly. Right? Emotionally, we get very tied to the outcome of the business, rightly or wrongly. We just do because we put so much effort into it, and we've all sacrificed so much in order to run the company. Maybe you've missed sales targets. I know companies are missing sales targets more now than in the last couple of years because, generally speaking, the economic environment is slower, right? So even if you feel like you can move quickly and you feel like you could still sell, if your customers are pulling back or your prospects are pulling back budget, or your customers are buying less and therefore they have less revenue, that means less revenue is going to flow to vendors and solution providers like you, right? And so we miss those sales targets. Again, that makes us feel like, man, can we keep going? Should we keep going? Maybe you invested in a conference and you get there, and within the first half day of the 3 days you're sitting at a booth in Las Vegas or Phoenix or Dallas or San Diego, you realize this was an enormous waste of time and money. And you're just like, man, what a waste. These are all examples of either difficult situations or decisions that we make that don't turn out the way that we want them to. And that's okay. But this is where we have to, in some sense, when I talk about ultra running, it's, the proverbial, you trip, you fall, you land in the dust, you land in the mud, you land in the trees, whatever that is. And you do need to pick yourself up and dust yourself off and keep moving forward. I've in the past told the story of my first year running this company, nearly 10 years ago. And I remember how I spent months and months and months cultivating and developing how I was going to move away from being the head of sales at Blend and then eventually be able to run and build this coaching company. And I had a period of time where I was managing some individual clients and I was building up my marketing and I was building up my delivery platform and I was building. And it was time to transition away from being full-time head of sales at Blend to now being a startup CEO myself. And I remember thinking how awesome it was going to be and how in that first year I was going to hit $1 million in revenue and everything was going to be great. And I was going to show the world how this was the best sales coaching program in the world for startups. And about 6 months in, I realized, the best thing I could do in year one is survive my own mistakes. Like hitting $1 million was a pipe dream. I didn't know it at the time because I had the Pollyanna eyes on it. But once I immersed myself in the business and I realized what it took to actually get customers and actually deliver customers and realize how many holes and gaps I had in my plan of action, did I realize, like, man, the best thing I can do is get through this first year, do as much learning as I can, and survive all of these mistakes. And so those are all reasons why we have to think about this principle as relentless forward progress. So even if you lose a deal, you go, okay, we lost this big deal with this customer who said they were going to buy the product after the big integration. It's easy to quit. It's easy to feel down. But then we have to pick ourselves up, dust ourselves off, and say, okay, what have I learned from this? What would I do better the next time around? And say, we will keep moving forward, that relentless forward progress, right? Now, that's within your current company. A second example that I want to talk about here of relentless forward progress is the bigger picture. The bigger picture. So, a good friend of mine, Zach Stein, I've had him on the podcast a couple of times. He now is the co-founder of a company called Carbon Collective. We are now clients of Carbon Collective here at Sales Qualia. They run our 401k program. And Carbon Collective was born out of a failure from Zach's previous company. So when I first met Zach, he was running a company called Osmo Systems, and it was a device for capturing data for shrimp farmers. So it turns out shrimp farming is a very large industry, and many of the shrimp farmers all across the world do not do a very good job of monitoring their shrimp growing locations where they grow shrimp. And this is all across the world, in South America, in Asia, in the United States. And so he built a device that allowed real-time monitoring of the water quality, of contaminants, of chemicals, of the health of the water. And after getting some early customers and some early pilots, he and his team hit some very, very serious headwinds when it came to the product itself. And he realized that the technical hurdles were going to be too much for him to overcome with this company. And so what does that relate to from the perspective of relentless forward progress? Well, the perspective here was that his ultimate mission for starting Osmo Systems wasn't necessarily to help shrimp farmers. Yes, that was important, and that was a component of where he wanted to go as an individual and where he wanted to make an impact in the world. But the even bigger picture for him was, how do I create a better environment in the world? How do I think about climate change? And shrimp farmers was one of the ways that he could make an impact when it came to climate change, when it came to the environment. And so once he realized that that path was no longer available to him, to his credit, he and his co-founder sat down with their investors. They still had some money left that was invested in the prior round, and they decided to move in a totally different direction, not just a pivot, but completely shift what they were working on. And that's what led to him starting Carbon Collective, which is now a financial services company that helps individuals and companies invest in carbon favorable companies. You can check out Carbon Collective. You can find them on the internet. Go to Google and search for them. And so I call this an example of relentless forward progress because for Zach, as much as the effort and the focus was on Osmo Systems, there was an even bigger picture for him. And so when he realized, like, hey, even though this company and this effort was not going to be fruitful and lead us to that ultimate outcome, there's something else I could be doing. And to his credit and his founder's credit, they decided that, hey, here's another path that we could take to get to the ultimate outcome, which is to help with climate change and to help with the environment. So inside the business, you could have these situations where you have to keep moving forward, but it's also important to extract yourself out and look at a bigger picture, where sometimes it is okay to quit. In a sense, you're quitting one effort or one endeavor in order to start a new one, which will still get you to the ultimate result that you might want to get to, right? A third example, if we go back to the business itself, is simply seeing a process through. So when I talked about business mistakes or bad hires or bad investments or deals that didn't close, sometimes relentless forward progress is sticking to something that we committed to do. So I'm going to use a personal example here from our company. And so over the last couple of months, I've been talking about on this podcast and on LinkedIn about an in-person live event that we co-hosted with Amy Volas over at Avenue Talent Partners. And the theme of the event was to build your roadmap to $100 million in annual recurring revenue. And so the vision of this event was first started, to Amy's credit, way back at SaaStr in September of last year. She and I spoke a couple times in the fall. We met again in January, and we decided We should be doing more together. And by February, we decided we're going to run this live event in Chicago and we picked the third week of April to do that. So that's a really short turnaround time for an in-person event that she and I had never run any events together. We never worked together besides referring business to each other. And while we had a good friendship developing, we didn't have that working relationship. And so there were many times from the beginning of the inception of that idea, going into early February, going into March, going into April, where there was reason to quit. Meaning, for example, the timing that we chose in April coincided with board season. So the same startups that many of which that we were targeting as those we felt like would be best served by you joining this event, many of the people we invited said, we'd love to come, but we have a board meeting coming up, or it's board season for us. We need to spend that week prepping for our board meeting that's coming up the week after. So it gave us like scratching our heads. Did we pick the right time of year? Should we just move this to the fall, right? Or move it to the summer? Why continue to do it in April, right? Another example would be that while we officially, I guess, or unofficially said we are going to launch this event and do this event in April, we said this in February, and we thought, great. We started emailing our contacts. We started posting on LinkedIn about it, but we didn't even have a landing page set up. We didn't even have a venue decided. And so we had a lot of logistics on the back end in terms of how we were going to market and promote this event, where we were going to have this event in the first place, how are we going to get the word out, how are we going to sell tickets, how are we going to make sure that our individual clients, Amy's clients and my clients, would also get invited and make sure that they were able to attend. And so throughout that course of the month in February especially, we kept hitting up more and more roadblocks. Like, man, it's taking much longer to get the landing page up and running. It's taking much longer to get Eventbrite up and running. It's taking much longer to find the right venue for the place. What are we going to do about food? What are we going to do about catering? What are we going to do about the fact that some of our clients already in February said they can't make it in April because they have other conferences that they're going to, or they have their own board meetings. We even had a hard time finding hotels to recommend to our guests because that same exact week in Chicago, there was a medical conference with 200,000 medical professionals coming in to go to that conference. It was the single biggest medical conference in that industry every year. It happened to be the same week. We had no knowledge of it, of course, because it's in the medical industry and we're in the startup land, right? So even there, we had all of these reasons not to move forward. And once we did launch everything and we started to promote the event, there was the first couple of weeks where everything was working, the landing page, the registration process, we had everything set, and we didn't get any tickets sold. And we're both looking at each other like, oh my God, like, what are we doing here? We've now invested, committed tens of thousands of dollars to run this event. And we haven't even sold a ticket, right? So all of those reasons that we could have put on the docket to say, here's all the reasons why we decided to postpone or not do it. But the thing is, back in the fall of last year, and even going back to last summer, I had wanted to do an in-person event with our business just for our clients. And we had stated to clients, hey, we're going to run an in-person event in July of last year. And we got some pretty tepid response, mostly because many of our clients are parents, they have families, and they just said, we have vacation set up, or kids are home from school and we don't have summer camps all the time. And we got to swap duties with my spouse or my partner. So I said, okay, it makes sense. Totally get it. July is not a great time. Let's move it into October. And so October rolled around in the calendar. So by August, we started thinking about logistics, starting inviting clients. And I realized that our team did not have the capacity to actually build and implement and execute on a live event. We were just short-staffed based on what we wanted the event to be. And even though we had a handful of clients say, yeah, we'd love to come or count us in, I actually had to cancel that event because I made the mistake of asking too much of my team. So now 2 consecutive times I wanted to run this live event for our clients, I had to first postpone and then cancel. And that was embarrassing, right? I felt badly about that. And so when Amy proposed to me in January that we should run this live event, I was both excited because I was like, yes, because I definitely want to do an in-person event, but I was also pretty scared. And I was pretty scared about what would happen if we said we were going to do this event and for some reason we decided not to launch it, not to do it. What if I told some clients we're going to run this event in April and it turned out not to be? That would have been 3 in a row. And that would have been, in my opinion, pretty horrible way for me to communicate and work with our clients. So there's a lot of trepidation there. But the commitment that we made to each other, Amy and I, and the commitment we made to our clients, and the commitment we made to the marketplace of founders just like you listening to this podcast, and how much we believe that the content that we were teaching is so critically important for the founders like you to learn and implement, we stuck with that process. That was the relentless forward progress on this event for both Amy and me and my team. It turned out to be way more work and effort than even I would have imagined, even after we had staffed up. It turned out to be way more difficult to sell tickets, but we did, and we filled the room and then some. It turned out to be way more difficult to get clients to commit, but guess what? Many of our clients, most of our clients did get to Chicago, including their team. They made that commitment themselves. They traveled to Chicago. They paid for the hotel rooms. They made that commitment to themselves and their teams to spend those 2 days with us. And it was all because we just stayed the course. So at some point, you have to make that decision that no matter what, we're going to see this through. And the way I got there for me was looking at the total downside risk. If I said, just from a dollars standpoint, between the money we invested and the money that Amy and her team invested in this event, and I looked at the total downside dollar risk, I looked at that and said, even if 10 people show up, I am comfortable with this downside risk. I can handle absorbing that loss, those expenses, in exchange for knowing that those 10 people that do show up, we're going to get the damn best event that they were ever going to have since over the last 3 years since COVID. Like, we were just convinced, Amy and I were convinced that the content, the flow, the presentation, everything that we were going to do and deliver was going to be top notch. And even if 10 people showed up, we were going to give those 10 people the show of a lifetime. And we did. And we had a lot more than 10 in the room. And so that's just a level of commitment that sometimes you have to make, this idea of relentless forward progress, in order to get to the places that you want to go. So that's my third example. So first example was the internal business mistakes and things that come up every week, every month, every quarter we're running our business. The second was that big picture idea of relentless forward progress, of just shifting the course of action that we take to get to the ultimate goal. The third was just around seeing a process through. The fourth one I want to talk about is an illustration that no matter how big you are, no matter how much success you think you have, you're still going to have challenges that you're going to have to push through. You're still going to have to exhibit this concept of relentless forward progress. And the example that I want to use is my former employer, Blend. So Blend, where I was the head of sales back in 2013, 14, 15. I was employee 13. I was the first non-technical person, non-founder on the team. Fast forward July 2021, and Blend has an IPO on the New York Stock Exchange. So you could imagine, how much growth they had experienced as a company. You can imagine how I felt being part of that early team. And you can imagine that, yes, it's true. I have financial rewards as a result of that IPO, right? And that was huge. That was huge for the company. It was huge for the industry, the mortgage and financial industry, that Blend was executing on that mission and vision that Nima, Eugene, Roscoe, Aaron, all of the founders had when they first started the company. That was enormous. That's by many and almost every measure of a startup to say we have IPO'd. I mean, think about the fraction of companies that actually get to that point, right? But even with the IPO in July of 21, IPO price was 18. I think it spiked up to like 21 or 22 over the course of the next 2 quarters. By January of 2022, the stock price had fallen to 50% of its IPO price. It was down to $9. That was by January 22. By the end of 2022, going into 2023, because of the headwinds in the mortgage market, as interest rates go up, the number of mortgages that get applied for and houses that get bought go down, right? People don't want to pay as much for a mortgage. So there's a lot of headwinds in the mortgage market. Many of Blend's customers are regional banks. We all know what's been happening to these big regional banks over the last 6 months with Silicon Valley Bank and Signature Bank and now First Republic Bank, and many, many other of these regional banks are feeling the after effects of those banks going under. They had a president, Tim Mayopoulos, who was formerly the CEO of Fannie Mae. They brought him in pre-IPO. He was the president through the IPO and post-IPO. And in fall of 22, he stepped away from that role. I have no inside information. I have no idea why he stepped down. But again, a big change for the company just soon after it IPO'd. It's like less than 18 months after the IPO. Now the president is stepping down. There's so many big things happening. And now by early 2023, the stock price is down to like $3. And 2023, with the regional bank situation, with mortgage rates continuing to stay high, with the overall economic environment. At the time I'm recording this podcast in May of 22, their stock price had dropped all the way down below 60 cents. It was trading at like 55 cents just about a week or two ago. And I share all that because they just had their Q1 earnings call, Q1 2023 earnings call. And while they still have a long way to go, they actually beat expectations on earnings per share. They beat expectations in terms of revenue. They beat expectations in terms of their expenses, right? They've shifted their product and continue to build product that now helps banks. In addition to mortgage lending, it helps banks with bringing in new deposits to their bank, which is creating some tailwind for themselves. The mortgage market is starting to pick up a little bit because interest rates are leveling off. Inflation rates are leveling off and even declining, which is giving the Federal Reserve a reason to pause the increase in interest rates, which helps mortgage rates. And now all of a sudden, while they still have a long way to go, now all of a sudden maybe they can climb out of this crater that the company is in. Maybe they do, maybe they don't. But I can guarantee you that the people that are there at Blend, from the leadership team down, they're looking at this situation, and they have to be looking at the situation from the standpoint of relentless forward progress. Like, talk about getting, down in the dirt and getting kicked, or tripping and falling in the dust and having to pick yourself and dust yourself off. Going from an IPO in July of 21 down to a place where the stock is trading at less than $1 to now looking ahead and saying, okay, what are our cash reserves? What are our losses per quarter? Can we cover enough of our losses long enough that we can climb out of this negative earnings per share to actually be a profitable company with some of the tailwinds we're seeing? So I share this story with you because even those places that you think are going to be a zenith in your company's development, whether it's the next round of funding, Series A, Series B, Series C, whether it's finally getting that first Fortune 500 company, whether it's finally hitting 10 million in revenue or 30 million in revenue or 100 million in revenue, or finally at some point hitting an IPO, there's still going to be challenges. There's still going to be obstacles. There's still going to be enormous things that get in your way, things that you can't predict, exogenous shocks to the system. I'm pretty damn sure that in July 2021, when Blend finally IPO'd, and I know they made that decision earlier in 2021, I am pretty damn sure at that time, they didn't think, oh, we're going to do an IPO in July of 21, but it's okay that interest rates are going to skyrocket, inflation is going to skyrocket, there's going to be a global economic slowdown. Some of our customers are going to be going out of business. Like, if they had known all those things, do you think they would have IPO'd? Maybe they would, maybe they wouldn't. But there's so many exogenous external things that happened. And as a company, they have to continue to push through that. And I haven't talked to anybody at Blend in quite some time. I have no insider information. I just look at this from the outside because I have the history of that company. And I look at that situation. And I know the only path forward is for them to go forward. And I hope that they do. Not just for my own personal benefit, but because I was part of that early team. I still feel like I'm part of that mission and vision, even though it's been 8 years since I've been, or 7 years since I've been part of that team every day. And so I share that with you because this sales rule of relentless forward progress, you can think about it in every part of your business, but in particular, especially when you think about sales, you're going to make mistakes. You're going to make bad hires. You're going to have deals fall through. You're going to wish that you hadn't made investments in conferences or that marketing content person or some piece of software or whatever that is. But the most important thing you can do is just survive those mistakes. Just hang around long enough to give yourself a chance to catch a break. Hang around long enough to give yourself a chance to catch a break. Sometimes surviving is okay. And on the trail, that meant sometimes just walking at a 25-minute pace per mile pace, covering 2 miles in nearly an hour. That is not fun when it's 3 o'clock in the morning and you've been up since 4 o'clock the previous morning because the race start was at 5:30 and you've already covered 78 miles and you still know you have 20 more miles to go. Like, that is not fun to go that slow. But if it's part of what it takes to drive through those difficult times, to push yourself through that chasm, through that downslide, through all the difficulties, so that at some point, maybe there's a downhill section, or maybe there's another aid station around the corner where you can reset. Maybe your legs come back around and maybe your stomach starts to agree with you again and you get some more energy and you can start running again. Maybe that just happens. But if you don't push yourself through on the trail and get through those couple of miles, then you're never going to get to that finish line. And the same holds true for you and your startup, whatever that finish line might be for you. So I hope you take this to heart. I've done a number of podcasts around my ultra running over the years. The most recent ones is a whole series that I did around the Western States 100 that I ran in June of 2021. So if you're interested, you can go back in the archives of this podcast or on the blog and listen to a lot more of those. More generally, talking about these kinds of applications of relentless forward progress and those sorts of things. But in the meantime, I hope you take this to heart and just know, like, if you're having a tough day, it's okay. It will get better. You'll have another opportunity in the next hour, the next day, the next week to improve. Mistakes is just part of it. Surviving those mistakes is what's most important. So you got this. I know you do. I believe in you, even though I may not know you. You're in this situation because you chose it, and you wouldn't be at this point in your journey if you weren't strong enough to continue on. Just give yourself another mile. Give yourself another hour on the trail. Just keep pushing. Use whatever capacity you have to get there, and maybe things will turn around. Relentless forward progress. All right. So thanks for listening to this episode of the Startup Selling Show, Daily Dose Edition. If you want some help, you want to just have a quick chat, as I've talked about many, many times in previous podcasts, I'm happy to hop on a call with you. Just shoot me an email, Scott@salesqualia, QUALIA.com, SCOTT, Scott@salesqualia, QUALIA.com. Flick me an email, type the word private into the subject line. Lets me and my assistant know you want to have a quick chat. We'll set that call up. We'll look at your situation. We'll work on some ideas for your startup when it comes to growing and scaling your sales. And if it makes sense to have more conversations after that, we can take things from there. That's it for now. Thanks for listening to this episode of the Startup Selling Show, Talking Sales with Scott Sambucci. I'm looking forward to having you on board for the next one. Talk soon.